This program is brought to you by Real Estimate. Know the value of your home today with a Real Estimate from realestate.com.au.
It's great to have your company here on Business Now. Let's take you around the country and see how the housing market's fared over the weekend. It really is the peak springtime selling season, with 2,111 homes up for auction. Of those, just under 67% were sold. In Sydney, 790 auctions, just over 62% of those were successful. In Melbourne, the signs of strength continues, with 868 auctions and more than 74% of those sold. In Brisbane, 88 auctions, close on, 64% of those went through. Adelaide does remain strong though, 67 auctions, and of those, 58 out of 67 were sold. In Canberra, 62 auctions, 77% of those were successful. Let's bring in here Eleanor Creagh, Senior Economist with the REA Group. Eleanor, can I just ask you to start off with this ASIC investigation into private credit companies? Given that many of their securities, they say, are backed by first mortgages, that's the company's claims at least, then how could any crackdown impact either investors or housing developers to get credit from these organisations?
Yeah, look, it's a really interesting question, and private credit is a very fast-growing segment of debt financing across the Australian real estate market, particularly for developers. So at the moment, it's estimated that across the debt financing segment, around 25% is funded by private credit. Obviously, that varies significantly project to project. So if you put that across the entire capital stack of a development project, that means you've got probably a 10% share taken up by private credit, with banks funding the rest and equity the significant component of the other share. So certainly tighter restrictions around the private credit funding industry could certainly mean, I guess, a dent for housing supply at the margins, really centred around probably those riskier developments anyway that are relying much more on private credit funding, probably have a much higher share of their funding source coming from private credit versus equity and bank funding. So probably denting, I guess, commencements of those sort of projects around the margins, which are typically kind of riskier projects and those more reliant on mezzanine debt.
Yes. So you've actually, on that subject, been doing a bit of work around supply and demand inside property, because obviously if there's a lack of credit or there's a squeeze on credit in that area, that can affect the supply. So over the past little while when you were watching this, how does the supply and the demand match up at the moment?
Yeah, so really tight supply in terms of active stock listing on market continues to be a key dynamic of our housing markets around the country, continuing to underpin home price growth. We saw with the latest REA Group listings report released last week that new listings nationally are down around 12% year on year in August 2025. And if we look at total stock on market, Melbourne, Hobart, Brisbane, and particularly Darwin, we're seeing that total stock is around 44% lower than this time last year. So really tight supply conditions in some of these markets.
Okay, so that's squeezing up the prices potentially at a time when interest rates have been coming down, are expected to continue to come down. What on the other side is the demand like in these capital cities?
Yeah, again, another really big part of the story at the moment in terms of housing market conditions. So we're seeing that nationally, inquiry per listing is at a 3-year high on realestate.com.au. Search volumes are the highest since October 2021. So clearly more buyers active in the market with the series of interest rate cuts delivered this year and boosting and restoring buyer confidence. Now, in some markets like Darwin, we're seeing that inquiry per listing is up around 50% year on year. In Melbourne, buyers are flocking back with inquiry per listing up in around 90% of Melbourne suburbs over the past year. And this is also translating into quicker selling times. Melbourne homes selling around 2 days faster, and Darwin selling around 44 days faster than this time last year. So clearly Darwin, a very small market, so these shifts in demand can have pretty outsized effects.
I'll tell you what, Eleanor Creagh, always great to get your insight and a bit of research as well. Many thanks for your time today.
Thank you for having me.